The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
I'm Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources Podcast.
Well, as we are recording this, there is good news on Wall Street.
Indeed.
The market is celebrating lower inflation numbers as we prepared to do this recording. Stocks are up and gold is down. Now, this is a real switch, but gold is down for a variety of reasons. It's finally this year broke above its previous high back in 2011. 13 years in a valley.
That's a while back, yeah.
Yeah, we were on the radio back in 2011, and there were two things that we made announcements of in June or July, and that was if you own gold, time to get out. If you own emerging markets, time to get out. And both of them have just struggled since then. The emerging markets still are, as a matter of fact. And of course, we had some rally around the COVID era when everything got shut down.
Correct.
Gold suffered some more. It didn't hit an all-time high. It has recently, but it's backing off. And one of those assumptions about why gold prices are down is because for the first time in years, the People's Bank of China bought zero gold in the month of May.
That's a low number.
They weren't selling gold. They were selling U.S. Treasuries, however.
Correct.
Which is keeping our interest rates higher, and that's something that the Fed can't do anything about. But the fact that gold is slipping a bit is partly because if there's no inflation, which people assume gold's an inflation hedge, and you have major central banks which are buying less or none at all, you need buyers who want to buy this stuff in order for the price to go up. This is kind of
that's a big deal, Don. That's a big deal, what you just said. Yep, that's a really big deal. And people, especially gold bugs, or people that think gold has a special value relative to everything else, they forget about that, and that gold is just another sector in the market, and it's supply and demand that drives that price of gold just like any other product. And if there's not a lot of demand, the price goes down. And so there's nothing magical about buying gold. There's really nothing there that intrinsically values itself higher against other options that are out there in the entire globe. It's just a matter of supply and demand. And when demand weakens, price drops, just like anything else.
Well, that's true for all commodities. If there's a shortage of supply and there is a demand, then price is going to rise. And commodities are volatile and cyclical. Gold's probably less so than something else like copper. Copper goes through some very short-term cycles. And copper had a big run up this year, and then it slipped back down. And that's basically because of the assumption that China is suffering a major economic slowdown that's going to last for several years. They were consuming massive amounts of copper and other metals, steel, for instance, as they were going through their almost 20-year building boom, building apartments and warehouses and shopping centers and entire cities in which nobody ended up living.
Whether they needed them or not, yeah.
That didn't matter. We were going to build anyway, and that whole process has caught up with them, and they're facing a major long-term downtrend economically. Their miracle growth cycle has come to an end. It's not much different than what happened with Japan, which its economy topped out in 1989, and they've had continuing problems ever since, and those problems are accelerating as their population declines. If they can't significantly change their birth rate by the end of this decade, They
Yes.
are on a path of internal elimination of themselves. We fear somewhat China wanting to take over Taiwan. In a couple of years, they're going to own Japan. They're just going to walk onto the northern islands and work their way down into Tokyo. There will be nobody there to put up a fight.
No one's going to be, and nobody left that even wants to. That's right. It's like, no, we're done here. And and Japan's trying desperately to address that and have been wildly unsuccessful at increasing the birth rate. They can't even get people to get married, let alone have kids. So it's a intractable problem for them at this point, and it's really difficult to change that trend.
Well, Russia has a similar problem. They've tried for years, one with a national holiday to go home and make babies, get paid
Correct.
for it at the same time. That has not worked. China is now in the same position that Japan was in 1989, with an rapidly aging population, lacking workers and lacking consumers. Then the consumers there don't want to buy anything anyway. They don't care whether
Correct.
gold is up or down. They don't have money and they don't trust their government and they no longer want to buy real estate, which is a matter of coincidence, happens to be the most favored asset for long-term investing by American investors. And as we saw that data, I said, well, we think of real estate as part of our portfolio decisions, but I think survey respondents probably viewed real estate predominantly as I want to own my own home because, in quotes, real estate always goes up.
There you go.
Unless, of course, you have a fraudulent problem with mortgage financing, in which case real estate goes down for lengthy periods of time.
Well, that didn't happen in this country, did it? Did that happen here?
Right.
Yeah. Oh, yeah. That was here. Right. That was here.
That was a great financial collapse in the 2007 peak of the market.
Oof.
And what we have that's supporting real estate prices, residential real estate prices right now, is a lack of supply and a growing millennial population that's reaching the family formation age. So we have pressure on the demand side and we have shortage on the supply side. And since COVID, home builders have been reluctant to go out on the limb and build major projects.
Absolutely.
Because they're afraid that the government will pull the rug out from underneath them again. There's risk associated with whatever you do. You cannot avoid it. It's a function of figuring out how am I going to manage this risk. I have to take risk if I'm going to accumulate enough financial security to handle my retirement years. How am I going to do that? And there are multiple avenues.
When you're looking at when you're looking for what are good long-term investment opportunities, and you're thinking real estate is one of those, because of what's happened to real estate in the past, you need to look at where we are now demographically and where we're going to be in the future, because it's a huge input for things like real estate. How many people are going to be here? How many of them want to buy a home? And what time frames that can happen in, because that really does drive a lot of the value added in a sector like real estate. And it changes a great deal. It is not consistent. It changes a huge amount. Right now, we're still getting over from COVID the work from home, and the commercial real estate, on the flip side of residential, the commercial side is in shambles, and it's not likely to have a huge recovery. Certainly not back to where it was. People are not going back to the office in huge numbers, and they're trying to stay away from there, in fact, as much as they can. That's a really fundamental shift in what's going on in the way American business works, and it's going to affect the way American real estate gets valued in the future.
So the higher interest rates are really putting a significant downside risk on the value of commercial properties.
Sure.
And commercial's a wide swath of things. You have hotels, you have shopping centers, you have retail stores. I think of CVS and Rite Aid and the auto retailers that have standalone shops. You have vacation properties. Storage warehouse, mini warehouses. Actually, I think mini warehouses is probably one of the least risky areas to be in, because if people go through hard times, they still try to save as much stuff as they can, and it goes into storage, and then it often stays there even when they get a new house.
Correct.
It may be smaller, and they're still keeping their stuff in storage.
I'm only smiling because I know how that works. So
I do too. I raised my hand. I know how that works.
Yeah, there you go. But Jerry Seinfeld, as Jerry Seinfeld said, storage, that's where you pay to keep your own garbage. You can go look at it once in a while, but you pay for your own garbage. It's like, thanks, Jerry. So yeah.
Can't afford to part with it emotionally.
That's it. It's important stuff. Yeah.
On the residential side, we've been through some really tough times in the last 20 years, and that has had a negative impact on it. In fact, we've been through times like that before, particularly here in the Northwest where we are.
Oh yeah.
I moved to Seattle in 1970, and that was the year after the SST program was shut down by the federal government, and Boeing was laying off people left and right. And many of the engineering firms that had been supplying parts to Boeing were going out of business. I remember calling on some of them as a young salesman. I was an investment salesman, and I was out knocking on doors trying to find people who had money to invest.
Sure.
Real estate prices were falling because there weren't any buyers because people were leaving town. And the joke around for long timers here in Seattle is the billboard on southbound I-5 that said, "Last one leaving town, turn out the lights." We should see if we can find a picture of that.
That's a good one.
Yeah.
That's a real one. Yeah, that was really here. Yeah.
I had a partner at the time who had been in his home for 20 years. So he was a longtime resident.
Yep.
3 blocks from downtown Mercer Island. He couldn't find a buyer for it to take over an $11,000 mortgage.
An $11,000 mortgage, yeah.
And there were no buyers for the house.
That's something else we need a picture of, that $11,000 mortgage, because you're not going to see that again either. So,
well, I think conditions aren't anything like that. You mentioned the demographic demand. So the millennials are a much larger population than the baby boomers were. And back in the 70s and the 80s, it was actually starting in the 50s when the boomers started going to elementary school. There weren't enough schools and there weren't enough teachers. So we had this big demand in educational institutions to ramp up preparing teachers for secure jobs and building schools. And once they got through elementary, it was junior high, and then it was high school. Then there's a shortage of colleges, and then there's a shortage of houses. Well, a shortage of apartments and a shortage of houses. I mean, this thing was just driven by this massive surge of baby boomers coming in various stages of the marketplace. And we basically are dealing with the same kind of thing with millennials today as they reach the stage where they are ready for family formation. They don't want to tell their kids, go play on the asphalt and watch out for the cars so they don't hit you. Or
it's not the same.
You want to play catch? Well, let's go get in the car and we'll drive 30 minutes to a city park and hope we don't get stuck with needles laying in the grass. They don't want to do that. They want to move to the suburbs and get their own backyard, a fence around it, so they don't have to worry about where their kids are. That demand is going to last a long time. Because of government intervention over the last several years since COVID, real estate developers are not anxious to go out and take large amounts of risk building massive subdevelopments or developments in subdivisions. They're going to be very cautious. So I think the supply factor here is going to be limited for probably a good decade. Now, interest rates should begin to come down sometime in the next year or two and make it easier for people to get into a mortgage and be able to buy a house. So the fact that 36% of the population chose real estate as the best long-term investment probably is going to be validated as we move into the next decade. For those retirees who need to sell their house, I think that they're still going to have a reasonable number of offers. Their big problem is that retirees probably have larger homes that the millennials can't quite afford or even justify maintenance on. I mean, I saw a house come to market recently in my neighborhood. The monthly costs are $15,000 a month.
Okay.
Well,
Yeah,
it's a
that's
very nice
rough.
house. It's
It
4,000
should be.
feet, has
Yeah.
a decent view, large lot, but that's not a
Yep.
millennial starter home.
Correct.
So
Correct.
retirees may have a little bit of a problem in liquidation, but as far as millennials, this real estate assumption being a positive investment in the long term, I think that's going to be validated.
There's going to be
Next in
somebody
line
to
were
pick up those
stocks and
houses.
mutual funds, and then gold, then CDs. Only 4% believe bonds were a good long-term investment.
Right.
And then cryptocurrency hasn't sold itself to the American public yet. There are only 3% of the population that thought it was going to work in the long term.
Right.
Okay. If you have questions about what should be your long-term investment and how you handle the volatility in the stock market, the market is very, very dynamic. And we are back in an environment where we have, well, it's no longer the Magnificent Seven because Tesla's out of favor.
Right.
So, and then Apple's had some problems of late. So we're down to the Magnificent Five or maybe four, but we have a concentrated market right now with a lot of dynamism in the underlying subsectors of the market. And this is not unusual. If we go back to
Correct.
1926, these kinds of periods are where the major market gains are made. And if you don't understand how that works and you want some help trying to figure that out, give us a call. Send us an email. Subscribe to our podcast. Go to our website, iriradio.com, and sign up for our webinars. You should be on our email list and get our weekly updates. There's a bunch of choices on your short-term to-do list. We'll be back next week. You have a great week.